Mag 7s because it's the only one we own. Why? Well, it was trading at 20 times and it had 20% plus earnings growth. Okay. Now it's got high teens to low 20% earnings growth ahead, trading at 27 times. The free cash flow yield's down to 2%. And that's a function of all that CapEx spending in addition to everything else that they're doing. So it's just getting rich. I think it's something that we are going to
You think it's getting rich. You have it at 27.5. I think our system has it about 29. But I'm looking at Microsoft at, basically 36.
Well,
Bill,
Microsoft.
I'm just going to Bill, too. Is Microsoft too expensive? It trades at about 36 times forward earnings. Jenny's saying 27.5, 28's too expensive.
Well, Microsoft they've embedded themselves up and down the AI supply chain, from data centers to implementation to software. I think right now it's really tough to sit there and say a valuation matters as a reason to be in or out of the stock. One of the things I'm looking at is, where is Microsoft relative to the Qs? And it is not even at a record high of its relative to the Qs. So it still has room to go. Today, it kind of closed in on it when it opened up higher. Maybe some of the CapEx spend is the reason why it gave up some of its gains. But I think what we're seeing here, it being an AI arms race, they have to spend. They're embedded in the up and down the supply chain. And I think it's a name they have to own. We own it. Just a touch under the benchmark, but it's been a staple in our portfolios.
Really quick, Josh, I want to come back to Jenny for a second. Yeah. So you're concerned about their spend, it sounds like. You're saying they're spending a lot. Actually, some analysts came out with notes today, HSBC, one of them saying maybe they're not spending enough because if they spend more, they can try to monetize WhatsApp, perhaps turn it into customer engagement. In some countries, if you've ever been overseas, when you try to do customer service, you do it through WhatsApp. So any thought that maybe they're not thinking big enough when it comes to AI at this point?
Here's the thing. Nobody knows the answer to that. And anyone who pretends they do is just blowing smoke. Nobody knows whether we're spending enough or not enough. And only time will tell on that. We know that they're spending a lot. And so for us, where we have a very strict discipline, which growth strategy needs to be a 5% or better free cash flow yield, it always brings us back to valuation. And I will always say, even when things get crazy, valuation matters. It acts as a safety net. So Frank, maybe they're not spending enough. Maybe they're spending too much. Nobody knows.
All right, really quick, I want to go to Figma right now. Just had its first trade not too long ago, I believe, trading between 95 and 100 right now. We're taking a look. Yes, right now between 95 and 100. Offering was at 33, so obviously big upside from there. Again, awaiting Figma's first trade. It could be between 95 and 100, indicated right now. And with that, we also want to go to a news alert. We have our Christina Partsenevelis at the NASDAQ. Christina.
Well, according to China's Cyberspace Administration, Nvidia met with Beijing officials just today regarding potential national security risks with the particular H20 graphic processing units, GPUs, that were being sent to China. Washington, just not too long ago, allowed Nvidia to resume the sale of these chips to China, reversing an effective ban. The reason why I'm bringing this up right now is because you have China looking at security risks around these chips, and now Nvidia has provided me with a new statement saying, quote, cybersecurity is critically important to us. Nvidia does not have backdoors in our chips that would give anyone a remote way to access or control them. That was the concern for China. If these chips end up over there, that possibly Nvidia could shut them down remotely. And so Nvidia is denying that, saying that there's no backdoors within them. Guys?
And with that, looking at shares of Nvidia right now, up just about 1%. Christina Partsenevelis, thank you for that news alert. Josh, I'm going to come over to you. You're an Nvidia shareholder. Yeah. Were you concerned about, it's only a couple of hours to be concerned about it. The news broke overnight. Were you concerned this might be an issue for Nvidia, and maybe some of the pop that we saw after they could sell, some of those gains might be lost if they weren't allowed to sell in China anymore?
It's always a concern. And of course, like in a perfect world, Nvidia finds a way to work with China that does not threaten the national security position of the United States or risk the ire of one side of the aisle or the other in Congress. It's very tricky to be this size as a business, to be this global, and to be this important to literally the global communications and internet infrastructure, and not run up against various political issues from time to time. But I think as a long-term shareholder here, the smart play has always been to just say, whatever the right thing to do is, Jensen will ultimately figure it out. It's been the story for, the 11 years I'm in the stock. I don't see why that will change. I have no edge on what's going to happen with the H20. I just think that the company has a really good track record of getting around these kind of thorny issues. I just want to go back to Meta for 1 second, because I think there are two things here that are really interesting. The first one of those is the sheer scale of the user base. They're telling us now that 3.4 billion people with a B are regular users of Meta products every day. So whether it's WhatsApp or it's Instagram, these numbers are unheard of in the history of humanity. And so from that perspective, maybe the stock is too cheap. How many companies can you think of that command that size of the overall human population on the planet and have the ability to market to them in a highly specialized way that literally no other company that exists can do? It's a really special situation. I'm not sure why we would expect it to sell at a market multiple, given that power. There are 8 billion people on Earth, and 40% of them are being reached by this company every day, most of them multiple times per day. I don't know. What should that be? Should that be a 20 multiple?
I would say that too. Impressions served up 11% year over year. Average price per ad up 9% year over year. And you got a stock that is literally breaking out to all-time highs, and you now have a defined floor at 740, that previous all-time high. Listen, I'm not saying you need to chase it today, but if it comes back in, there is a well-defined support. And as you talked about, the numbers are phenomenal here. There's a reason why you have basically a $2 trillion stock that is up more than 10% in a single day.
So can I just riff off of Josh's comment? You said, and the AI stocks, which is Meta 2, are overshadowing everything. And then when you say overshadowing and then 3.2 billion users, one of the things that I'm starting to worry about is it really overshadowing, or is the AI and Meta play actually sucking the life out of everything else? And that's what I worry about, is are all the investment dollars and all the investors going to the Metas versus the kind of the rest of the economy? Is all the
really
money
good
flowing
question.
there? This is something. Sorry,
And the top talent going there too.
Everything's going there, and it's an interesting thing from like a more existential thought, which is how does it work when half the world is using Meta's products, and they're getting all the dollars?
Meaning, what aren't they using?
No, not really. Just like how do you invest in that environment when all the dollars?
The thing is,
You mean all the
same place.
investor dollars or the ad dollars?
Everything.
Okay.
Investor dollars.
Well, the ad dollars though are
coming.
coming from every other sector of the economy that needs to advertise somewhere.
But let me give you an example. So like here's a doozy in my portfolio, Whirlpool, right? And I was reading an expert report the other day, and it's saying like, look, Whirlpool isn't investing in their technology as much as they should. Of course they're not. Investor dollars feed into the companies that then use that to invest in technology. All the dollars.
You don't want AI bathtubs?
I would be actually fine with what.
I think you raise a good point, because you and I, by the way, happy birthday today.
Thank you. No, Tuesday.
It's Tuesday?
Yeah,
okay.
Tuesday.
For the viewers,
thank you.
Jenny's 30th birthday is coming up.
That's right.
You and I lived through the first version of this in 98, 99, where the investor class basically said, I really don't want to hear about anything that's not related to the internet. It's not that there aren't opportunities. It's a game where you say to yourself, yeah, but other investors aren't going to come and buy this stock from me higher because they only want to buy one thing. It's not healthy. We get to that point. And I think the top 5 market cap stocks now, all AI, spoiler alert, I think they're equal to the market cap of the bottom 430 S&P 500 names. That's absurd. And the problem is it was absurd when they were equal to the bottom half of the S&P 500.
And what happens to the bottom half of the S&P 500 if all the investor dollars, all the attention
they got to figure out how to talk about AI.
Isn't the question, is this a bubble?
It's a
is this a bubble? Whether it's just a speculation, investor bubble, or confidence bubble. In fact, Wolf came out with a note titled "All-Time Highs, All-Time Worries," basically saying the seeds are potentially being sown for a bubble to form, or at least for a run-hot economy over the next 12 months. And Josh, if you don't mind,
but the earnings are there.
We were talking about this before, and Malcolm, I'm going to get you to weigh in. You were also talking about some of the other companies that we used to see as bellwethers are doing very poorly. A UPS, a Nike, and we're not paying attention to that because we're so focused on this trade.
Give me a chart of UPS. This is the worst chart in the Dow Jones. So this is a quote-unquote bellwether of the quote-unquote real economy. Guys, give me like 10 years, please. 5 years, something.
Do 5.
Do 5.
It's not doing good today either. So I think it proves
the point is this stock goes down every year. It's like one of the most obvious things to bet against. I wouldn't blame AI for this not working. My point is nobody seems to care. Chipotle is a falling knife. Nike's been horrible. Starbucks horrible. And these are companies where when they used to report, we would be like, ooh, the health of the consumer. forget it. Nobody cares.
I think we got a
They
glimpse
keep going lower, and AI keeps bailing out the rest of the stock market.
I think we got a glimpse of what the market kind of wants to do right now, and a pullback would be very healthy. I think it gives a little bit of sort of refresh. And after the Fed yesterday, you saw the odds of rate cuts get pushed all the way out. There was a 60% chance that they were going to cut twice this year. Now it's 40. There was a 67% chance they were going to cut 25 basis points in September, and that's now something like 40. The dollar's been rallying. There's a big short position in the dollar that's unwinding right now. That brings pressure to asset classes. You saw the S&P literally close near the lows, came off the lows, probably because no one wanted to be short or people wanted to make sure they were positioned ahead of Microsoft and Meta earnings. And then you had two companies, a $2 trillion, a $4 trillion, basically, report with great reports and moved the entire market up 1%, the entire S&P.
Yeah. To your point, the dollar's actually having its best, on pace for its best month since September of 2022. So you are seeing a bit of a reversal in that trend, the year-to-date trend. And speaking of reports that could be market movers or inflection points, Apple, one of the names reporting after the bell today. We got Steve Kovac out at Apple HQ ahead of that critical print. A lot of eyes on this, a lot of expectations for Apple to maybe clarify its AI strategy, Steve.
Yeah, we'll get to AI in a second here, Frank. But first, let's talk about tariffs, because that is another big thing that's been weighing down on the stock all year long, why it's been underperforming most of this Mag 7 peers. We know there's going to be a $900 million impact from tariffs in this June quarter, but everyone wants to know what that looks like for the next rest of the year, rather. We heard the mitigation efforts from Apple last time that they're going to, focus more on bringing iPhones from India to the United States, which has that lower tariff rate. Still not enough to fulfill all the demand of the United States. We're still going to get iPhones from China at that higher tariff rate. So what do margins look like moving forward? We're going to look at the guidance for that on the call. And whether or not, excuse me, that tells us there might be a price increase with those next iPhones that come at the end of this quarter that we're in right now, or if Apple's just going to go ahead and eat those costs. So those are a couple things to look out for. And then on the AI front, like you guys have been talking about all segment now, the enormous spending from the peers. Microsoft on pace to spend $120 billion in capital expenditure. But for just one example, we have not seen Apple come anywhere close to that. We know they had those big delays for their artificial intelligence products. They say it's going to come next year, and we're going to hear a lot of questions, I assume, on that earnings call for Tim Cook and the rest of his team, why they're not spending so much and what makes them confident that they have a good AI strategy and team in place to compete with these peers who are moving so quickly, Frank.
Our Steve Kovac at Apple HQ can have the numbers after the bell. Steve, great to see you as always. Following some of Steve's comments about Apple after the bell, I'm going to go over to you, Josh. You're an Apple shareholder. Is this a tense moment for Apple shareholders? I mean, especially after these blowout reports from Meta, blowout reports from Microsoft, blowout reports from Alphabet. Is there potentially an inflection point for this stock to take a serious downturn just on disappointment?
I don't think this time. I mean, anything could happen. My bet would not be a serious disappointment. I think the shareholder base is already disappointed, and they've been disappointed for a long time now. The last quarter, Apple reported with cash flow growth in the double digits on a year-over-year basis was all the way back in Q1 2024. Here are the numbers over the last 5 quarters, and this is why it's hard for them to disappoint. Negative 1.5%, positive 0.46%, positive 3.6%, positive 4.1%, positive 6.1%. That's EBIT growth year over year. These are not great numbers for a Mag 7. The thing is, this is the only gigantic company that is almost adamant about not raising CapEx. Full CapEx spend this year is supposed to be $11 billion. For Apple, it's literally pocket change. You're talking about a company with hundreds of billions of dollars at their disposal to do whatever they want with. And what they seem to want to do is a buyback, tiny dividend, and just business as usual in the midst of all of their competitors going absolutely crazy. 20% of revenue, 30% of revenue, Microsoft almost 40% of revenue, and Apple's not doing it. And so if you want to be a contrarian in the Mag 7, if you want to pick the one company that doesn't believe they need to act like this, buy Apple. And from a disappointment standpoint, no one's expecting anything. It's a no-growth business. We all get it, and yet we're valuing the stock here anyway because of the stability.
You said it. No one's expecting anything here, and that's the kind of thing I like. Now, I'm not sitting here and adding Apple right now. We're really well underweight Apple in our portfolios. We've got a weighted 3.5% in our portfolio. I want to buy Apple. I'm thinking that, listen, they underwhelmed, but a lot of the negativity is priced in. Actually, today, it is making a new low against the Nasdaq on a relative basis against the Qs, the lowest it's been relative to the Qs since the summer of 2020. I would like to see Apple 195, 190 range. I would probably we'll double my position and get it up to
if it falls down to 195.
If it falls down to that range.
Malcolm, I want to come to you. By the way, can we show a year-to-date chart of Apple right now? You were talking about stocks that are potentially falling knives. If you look at the year-to-date chart of Apple.
Just that one payment alone represents something like 10% of Apple's earnings. So that going away probably does get you into the 190s range, into the price target that a lot of folks like me have been looking to add additional shares of Apple to their portfolio. But to me, if I'm Apple and I really want to free ride on what the momentum is,
all right, so it looks like Figma isn't going live anytime soon. I'm pausing for a little bit. I'll be in and out of the stream. Let's see what's going on Twitter.
Business, but go back to the Alphabet part. So they lose, I think it's $20 billion in annual revenue if the judge rules against them.
Yeah.
And the stock falls down to 195, and that makes the company more attractive, Bill, because you were doing a lot of nodding over there. What makes the company more attractive after they lose $20 billion in annual revenue?
Well, once the moves is baked in, I mean, right now, they're already pricing in, like, not growing revenues to the extent that they have in the past. I mean, a lot of the negativity is being priced in. And I come from the school of, if all the sellers have already sold, who's left to sell? So I think a lot of that's really been baked in. And if they lose that revenue, the market's going to react. That could get us to 190, maybe a little bit lower real quick. But I'm looking at 190, 195 on a technical basis. There's a nice little uptrend that it's hanging. If it trades lower here, it's got to get down in that range. Negative news on top of that could exacerbate the downside. But I'm sticking with my guns, and I would look to be a buyer of Apple.
We also have Amazon reporting after the bell. Josh, you own this one. Obviously, the #1 cloud player. After blowout cloud results for both Alphabet and from Microsoft, it seems like there's a lot on the line when it comes to AWS and being able to not only meet the expectations but exceed them.
Yeah, we wrote this up as part of our Best Stocks in the Market series at CNBC Pro this morning. I own the stock. It's on our list. This is still below its February high. So if you go back to February 4th, the company was 2 days away from reporting earnings at a record high, $242 per share. Reported that number. The market didn't like the guidance. It was a good report, but the stock fell 4%. And then we got into the whole tariff trade war stuff, right into the teeth of Liberation Day. And this stock was in a massive drawdown. What's happened since April is a 25% recovery in the share price, almost back to those February highs. Not quite through. What we wrote today is that if tonight's report shows they've been executing, which I think they have, you will see a new record.
All right, let's see what's going on Twitter. Looks like nothing is live yet. Damn, it's about to open at 90 to 100. It's crazy. It's crazy to me that Adobe had a chance at buying them for $20 billion. Yeah, right. I don't think this is going to open like Circle. Circle was bananas, guys. What's my reasonable price? So I got allocated one share from Robinhood for like 33 bucks. But I don't know. I mean, 50 maybe. Like tripling is just insane. Did anybody else get allocated? All right, let's see what else is going on here. Wow. I don't know where this info is coming from, but like, yeah, it looks like it's going to be priced at like 100. Hold on a second here. Figma shares indicated to open 100 to 105 each. IPO price is 33. Whoo-wee. Yeah, bro, we all got one share. Yeah. This is bananas. Trying to get some coverage on it, but it seems like Bloomberg, CNBC, nobody's really doing anything right now because it's not trading. Yeah, now the posts are starting to roll through 100 to 105. That's so nuts. Should you put a limit order in? I mean, listen, bro, like you miss 100% of the shots you don't take, right? So try it. You might catch a bid. Who knows? I doubt it. But hey, throw it in. What are you thinking of throwing it in at? I mean, this could be another circle open, so who knows? I would, if I were you, I would probably throw it in. All right. Do we have any coverage? Let's see. Nothing yet. Nothing yet. Like I said, what price? I don't know. I mean, if I could predict what bid you were going to catch, I'd be a freaking trillionaire right now, dude. I'd probably throw in at like 45. Yeah, zero hedge here. Figma shares indicated to open 100 to 105 each. IPO price 33. Yeah, bro. Everybody is thinking this is insane. This is what 98 through March 2000 felt like or was like, but every single day. I mean, yeah. Let's go back to coverage.
Tugging along. We've been in that soft landing now for 4 or 5 years. You know, inflation still hasn't hit 2%, 2.5 or 2.7. Now we look at it, and I think, you know, if inflation comes down, the economy continues to do well, they'll probably reduce rates shortly.
I also asked him about the news that he's had several meetings in recent months with President Trump after years of tensions between the two. Diamond said it's his job to make the country better and help, noting that both they and the administration, quote, reach out all the time. And on the cusp of the tariff deadline, Diamond said they've been, quote, greatly moderated and that people can deal with 15%.
We started tariffs, we didn't know what they're going to be, and now we kind of know, and they're more moderate and thoughtful and, you know, more carefully done, and hopefully they'll help some companies export. Maybe some people move manufacturing back here. So, so far, so good.
We also spoke about private credit, which he describes as having both pros and cons.
I'm not against private credit. I do think there are issues in it, that will rear themselves one day. I would say there are issues in credit in general that rear themselves one day. So it isn't, I'm just cautious about when people provide credit.
Diamond said the firm is doing private credit to give their customers choices. Frank?
Leslie Picker, live in Charlotte. Leslie, great interview. Thank you very much. I want to get the desk reaction. Josh, I'm going to start with you. What did you make of what he said specifically about private credit?
All right, still nothing here on the coverage. Let's go back to Twitter real quick and see what's going on here. All right. Anything else here? Hey, Anthony's not right. Not wrong, actually. 3x on IPO day is just another sign of retail being at a disadvantage. Billions of dollars quietly transferred from employees who built the company to investors who will flip out of the stock in a few days. Yeah, that's true, dude. I mean, a lot of investors, when it comes to IPOs, they'll get in, they'll flip it, they'll get out. Kind of sucks.
Look, because of how safe this asset class has now been deemed.
The bill. Oh, sorry. Go ahead, Mike.
I'm just thinking the question is, does it belong in places like a 401k, right? If we're talking about a market where potentially folks could get wiped out as that stuff makes its way from the super top tier, ultra high net worth investor who now needs liquidity, and so we're coming on down the food chain. It's making its way in the 401ks, which is most people's largest liquid asset. I have concerns there about the illiquidity where it started, making its way to average.
It's very saturated. But I mean, they're making money on it. They're making money on trading. I mean, the volatility has been big, but even with low volatility, these companies are making more money on trading. I think that's big. And then the M&A, mergers and acquisitions. I mean, Figma going public. These IPOs, this credit, this stuff is actually going to really be a tailwind, I think, in the second half of the year.
I mean, really, today's really the stories about the capital markets. By the way, still looking at Figma. We're going to show it right here. I believe now it's indicated to open at 105 to 110. So again, it keeps moving up. Just want to get your take, Jenny, just on the capital markets, the idea of the IPO pipeline opening back up again. This is one of the bigger tech IPOs in recent months.
I just wrote Josh a note that it smells like 1998, which, by the way, I love that smell. But it's been a long time, right, since you saw priced at 30, opening at 105. I think it's good for the market. I think the more money and the more companies that come into the public markets, the better. One of the things that Jamie Dimon wrote about in his annual shareholder letter was how there used to be, I'm going to get these numbers all wrong, there used to be like 9,000, all these numbers. There used to be like 9,000 or 8,000 publicly traded companies. It's a fraction of that. This is a wonderful market that really allows everyone to have access to. So the more IPOs, the more access people have to great companies. Can I riff one thing on the private credit? What's a really nice way to get private credit? One of the companies that I own, the name is 6th Street Specialty Lending. And they reported earnings last night, fantastic earnings, supported the dividend, paid a special dividend too. But there are publicly traded companies that invest in private credit. You can just buy those. You don't need structured products or wrapped up, fund of funds to get them. There is a whole bunch of publicly traded companies that transact in private credit, and it is a great space to be in.
We have to move on, but to your point, Jamie Dimon said years ago we had 8,000 public companies. We're down to 4,000.
That's what it is.
And he says, some of the regulations have been onerous, stopping a lot of these private companies from entering the public markets. Obviously not impacting Figma. Big showing here at the New York Stock Exchange. Again, the IPO priced at 33 a share, indicated to open right now between 105 and 110. All right, with that, let's get to our headlines with Kate Rogers. Hey, Kate.
Hi, Frank. Community members and New York City police officers streamed into the Bronx today to attend the funeral of one of their own. The services for Didarul Islam are in the same neighborhood where the Bangladeshi immigrant lived with his pregnant wife and 2 children. He was killed earlier this week in the mass shooting at a Park Avenue office building in Manhattan. President Trump is expected to sign an executive order today that would bring back presidential fitness tests to America's schools.
Own a design studio. Win a really big design contract. Realize you're more of a creative type than a finance type. Realize you got this. Use QuickBooks to get your cash flow flowing. Get live expert assistance to maximize your tax savings.
I can help with that.
Get back to doing what you love. Manage and grow your business all in one place. Intuit QuickBooks, your way to money.
The first day back from maternity leave is so weird. We get it. Find a caregiver who does too. Join now for 20% off care.com.
You founded your kayak company because you love the ocean, not spreadsheets. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job on Indeed, candidates can find it easier, so you can hire easier. Visit Indeed.com/hire.
Dear Dr. K, I used to think I was never meant to be beautiful. I was teased because of my teeth. I didn't like the person looking back at me in the mirror. I never thought I could afford dental implants. You and your team worked within my budget and helped me feel confident in the plan we made together. I love
try to do pay by Venmo, where the vendor, like the e-commerce site, they would pay them something. There's very little uptake on it. And peer-to-peer, nobody's going to pay for that because Zelle is free.
Call it Venmo.ai, and then we'll start to...
We got one more committee move to get to very quickly. Bill, you're trying to play some of these trade deals with Cheniere.
Yeah, Cheniere. So you have a trade deal with the EU. And we sold Cheniere a couple months ago, kind of with a lot of uncertainty surrounding what was happening around the April tariff announcement. We have a trade deal with the EU, and Trump is really aligning these deals with investments in the U.S. as well as energy. And if we're going to start to see energy being, the EU committing to energy, there's no one really in a better place right now than it comes to somebody that's exporting LNG. And these terminals take years to really implement. So I think what we're also seeing is sanctions on Russia. We're going to really see a need for LNG imports from the U.S. into the EU. I think Cheniere is very well positioned for that.
All right, Cheniere shares up just about 1.5% right now. All right, coming up next, Mike Santoli. He's going to join us as we await Figma's first trade. Taking a look, a lot of action here on the floor. It's looking like it's going to open up at between 105 and 100. Remember, it was priced at 33. You can hear a lot of buzz behind us. Mike Santoli coming up right after this. Stay with us.
CNBC Podcasts. All your shows on the go. The latest market news and analysis. Ready when you are. Don't miss out. Listen to CNBC wherever you get your podcasts. Introducing CNBC Plus, a new streaming platform from the #1 source in business news. On-the-go access to international financial markets, business news, and analysis as it happens. Bell-to-bell global live stream, CNBC Plus real-time data, and full episodes of CNBC's Business Day lineup on demand. CNBC Plus.
Guys, I have the chart up, but nothing's happening. I'm sure there's so much fucking demand for this thing. After people saw Circle, they're like, I need to get in. Who is putting in some bids here? Oscar, I have no idea what a good limit order price to set is, but if I were you, I'd probably go in at like 50, to be honest. But then again, this volatility with IPOs in general, the volatility is pretty crazy. So your bid could hit, it could go down a bunch, then it could come up a bunch. Like, it just depends on what kind of tolerance you have going for this investment or for a trade. Like, are you trying to like keep Figma long term, or are you just trying to flip a trade? I mean, if you're thinking about flipping, then yeah, I don't know. I'd put it in at like 50 or so. You might catch a bid. You might lose all your money too, but 72 hours ago, probably good. Probably good. Should be trading any minute now. I've got the CNBC stream in the background. I'm refreshing the chart. All right, we got some coverage here.
Is the hype build up and then it just keeps going, or do you see a different,
I mean, it can completely go either way, but in this instance, it usually is the case that you're going to basically have a lot of demand get cleared at the opening price, right? It's a pretty good size IPO. Now, it's not like a massive float or anything like that, so maybe it'll feed on itself for a while. You're going to have to wait and get some updated results. We only have first quarter numbers from this company, but we'll see. Look, this is a market that we've seen is susceptible to getting captivated by individual AI-related or just retail trader favorites, and maybe this is going to get into that mix. So, look at the way Circle traded. Massive one-day pop, and then it's had some time coming in since then.
Our Mike Santoli over there at Post 5 tracking Figma right before its first trade. Right now indicated to open at 105 to 110. Again, priced at 33. Mike, thank you. All right, coming up next on Halftime. Copper on track to post its worst day ever. We're going to trade it with the committee. Halftime's back right after this.
I get really anxious before any season. It's the 20th year. That puts even more pressure. So we just pray that good people have turned up. Otherwise, we're screwed.
You guys ready? G-Side.
Yeah, still nothing. Still nothing. Let's see. All right, chat, whoever's in here, do you guys have Figma? Are you guys putting in limit orders? What's going on? Do you want to own this long term? Chat, chat, chat. I work in tech personally, so my whole thesis here on Figma is it's a solid company. Do I want to own it long term? Yes. Do I want to try to get in on the day of the IPO? I've never been one of those people. Like, there's just too much volatility. So I'm going to wait till it settles. Maybe I get it at a higher price, but I think I'll start allocating some capital to this, but I don't know when. I don't know when. I want it to be a core holding long term, but who knows? $110 now? That's nuts, dude. Let's see what she opens at. This is crazy. I think Figma's a great company, though. I'll say that. I use it at work a lot. I work with designers a lot. We go back and forth on specs. Yeah, I mean, Their numbers were also great. Let me see if I can pull up their IPO numbers. Let's see here. Okay, it looks like Figma's trading now. Oh, not yet. Not yet. So there was a lot of excitement there on the floor. I don't know if you all heard. I was trying to find the Figma IPO metrics. I really liked their metrics. Here it is, I think. Yeah. Okay. So revenue. Figma generated 749 million in revenue in 2024, demonstrating a 48% year-over-year increase. In Q1 2025, revenue reached 228 million, up 46% from the previous year. Okay, so they're clearly revving up. Profitability. So this is really cool. The company reported a net income of 44.9 million Q1, a big increase from 13.5 million a year ago. Gross margins were strong at 91%. So this, I mean, any software business that has above 80% margins is considered very good in Silicon Valley, and just generally, just like as a benchmark, it's considered a very good. 91% is great. Rising operating expenses led to a net loss of 732.1 million in 2024. So yeah, lots of OpEx, but that's normal. They're a growth stage company. They are trying to spend on growth. They probably have a huge AWS bill. They probably run AWS. From a retention perspective, Figma demonstrated excellent customer loyalty with a net revenue retention of 132%, indicating that existing customers are increasing their spending by 32% annually. Nuts. All right, are we trading yet? Are we trading yet? No, we are not trading yet. Let's see, what else do we have here? 13 million monthly active users, including a significant 95% of Fortune 500 companies. So clearly they are selling into enterprises very well. One anecdote that I can tell you all from my career is everybody used to be on Sketch. Sketch used to be the thing. And then almost like from one day to the next, everyone switched to Figma. It was bananas. And I mean, it made sense because it was a web-based design tool. You could share easily. You didn't have to do all this weird version control with your files. So excellent business. But anyway, rule of 40, sorry. Figma achieved a rule of 40 score of 63, a key metric combining growth and profitability. Yeah. So rule of 40 is obviously a benchmark, and they are at 63. So anything above 40 is good, obviously, and they are at 63. All right. AI investments. Yeah, of course. Everybody's heavily investing in AI. AI is boosting productivity, yada, yada. We all know that. So anyway, yeah, overview of Figma. I mean, there's nothing to be kind of not excited about if you're going to be a long-term investor, if you want to buy this name. I mean, like I said, I probably will DCA into it and build a position, but am I doing that today? I don't think so. Robinhood allocated me a share on a different account. So yeah, fully allocated with one share, guys. No coverage yet. CNBC's back from break. Let's see. All right. They are waiting on the trade right now, according to CNBC. All right, let's see. Who is buying Figma today? Wow. Okay. All right. Wow. Okay. So obviously not a lot of people here, but still, I mean, 50-50, yes, no. That's pretty crazy. I don't know that I would be buying at these levels, but hey, if it goes to 200, goes to 200. All right, guys. I am going to be heading into a work meeting soon, but I'll keep the stream open. Yep. Open. It will be open. Just letting you all know. All right, 64% of you so far are buying Figma today. All right, bullish Figma. Okay, y'all, I am leaving the chat. I am leaving the chat to go to a work meeting, but I will stream the coverage. We'll stream the coverage. All right, CNBC will be streamed now.
Agnico Mines, they reported a beat. They also almost doubled their free cash flow from the previous quarter. And what we're seeing here is a divergence from the weakness in gold. And so I think gold's come back the second half of the year, and that opens the door for some really good strength there.
Jenny?
Ethan Allen, good earnings yesterday, good enough to issue a special dividend of 25 cents.
And Josh?
Shake Shack, staying long.
That's it? We got 10 more seconds. Got anything else?
Super long. I don't know.
All right, that's going to do it for halftime. The Exchange with Dr. John Ford. It starts right now.
Frank Holland, thank you. Welcome to The Exchange. I'm John Ford, in for Kelly Evans. Another day, another record for the S&P and the NASDAQ. Meta and Microsoft can take credit. Big gains for both after blockbuster earnings. Meta up, let's see, 12% or so. Microsoft 4.5%, enough to make that a $4 trillion market cap company. And that report is the reason why Citi is upgrading CoreWeave to a buy. That analyst is going to join us with the runway he sees ahead. CoreWeave is up about 13%. Amazon and Apple are next on deck for earnings, and the bar is now high. We're going to look at what both need to do to wow investors now. And we are on first trade watch for Figma. Shares of the enterprise design software company priced at $33 a share, now indicated to open at more than triple that amount, between 100 and 105 a share. CNBC senior markets commentator Mike Santoli live on the floor of the New York Stock Exchange. I guess this is getting them into $50 to $60 billion market cap range, I imagine, just from rough math, Mike. And Adobe is at around 151. Adobe's trading about where it was 5 years ago, 5+ years ago. It is the 500-pound, however many pound gorilla here, but it wanted to buy Figma. Now everybody else gets a chance.
Well, exactly, John, and maybe giving you an indication of why Adobe was really interested in buying Figma and having a little piece of that faster growing part of this business. I was also looking, and you would know better than I, John, but you look at like an Atlassian, it's about $50 billion market cap, so it's getting up into that range in terms of software competitors. We are here at Post 5 with Peter Giacchis of Citadel Securities, going to be opening up the stock, Pete, in any minute now, I guess, or how is it tracking at this point?
Yeah, so it's gradually seen demand all morning. We've seen the indications move higher. Right now at the 100, 105 level, we're settling in about. We're not in the 15-minute window to open yet, but we're getting close to opening.
Yeah, when you first started to flash the indications a couple of hours ago, it was like 65, 70. So talk to me about the process a little bit. I mean, that gets displayed out there into the market, and you're just essentially seeing sort of rounds of further demand come in?
Yeah, it's very similar to what went on last night for the company in the pricing round, only it's happening real time today in the market. And as people get the opportunity to react to those indications they see, they judge whether they want to buy additional shares or sell additional shares. As you know, it's a very kind of played out process to try to have the most robust opening print that we can in these IPOs.
Right, the most representative kind of price that clears the supply and demand at the beginning there. Now, it has moderated from, it was 105 to 110. So I guess, does that mean it's sort of, zeroing in on a price here?
It's starting to find a level where there is supply and demand meeting at this level right now in here. That's going to change dynamically over the next 15 to 20 minutes, but we are starting to see that supply and demand meet at this level.
John, I think, has a question.
Yeah, Pete, I love that Mike mentioned Atlassian off the top because they're known as a pioneer of this idea of product-led growth. The idea your product is so good that you don't have to spend a lot on marketing to fuel growth. Figma has certainly seen that. It helps the margins. And right here, its market cap would be somewhere between, I think, Atlassian and Autodesk. Autodesk being another design name. Also, something unique about Figma, it seems to me, is it's kind of like a traditional software company in a way, right? Unlike the AI hype cycle. What is it, do you think, that investors are looking to from this one? What's the convergence of storylines that has investors so interested?
Yeah, I think it's an interesting question, and I think part of it is that, for a software company, the fact that it's profitable certainly helps the situation. In a market where traditionally we haven't seen a lot of profitability and growth, to see a growth stock that has that profitability is certainly piquing investor appetite, as you can see from the indication.
Now, do you imagine that this is going to set the table perhaps for Canva? It's another design company out there based out of Australia. So I can make more comparisons to Atlassian here, but more on the consumer end, whereas Figma is coming more from the corporate end, looking perhaps at coming public as well.
Yeah, I think in general, I think the big in the market have the debut, but for the market in general, this is certainly a healthy view for the IPO market.
And then once we get through, we get a pricing today, it's going to be more or less, like it's trading like any stock, right? It's just going to be listed. What do we typically see? Is there a way to say that there's been a pattern we've seen once we get that opening price, whether in fact we have follow through or it comes in a little bit?
Yeah, I think honestly, Mike, if you look at the first day of trading, there'll be a little bit of shakeout in volume. Clearly, it's going to trade a tremendous amount of volume today. Normally, what we'll see is within the first 3 to 5 days, the stock then begins to settle down and figure out what the range is and what the street really views that range as.
Sure. We are going to be waiting for real numbers, updated quarterly numbers from Figma. And John, one of the implications of this big ramp we're getting, presumably on the opening trade, is about that sort of hyper-powered moonshot executive compensation provisions that were in there for co-founder Dylan Fields, from prices between 60 and 130, gets a lot more stock along the way. So it's got to be a 60-day average price, but that would be a head start in that direction, John.
Mike, I got one more for Pete, if you will, and it has to do with the retail trade potential here. I do some banking with SoFi. Of course, we can't trade individual stocks because we talk about them too much here on CNBC. But I noticed in the SoFi app availability of Figma, and I wonder to what degree so many of these apps now that are trying to give retail traders access to some of these names, how much that's influencing the excitement around a name like this when we're looking to see if the IPO market has legs.
Yeah, so John, obviously on the floor of the exchange, we don't see who the end customer is until the trade actually clears. But what I would say about the retail piece, the retail customer in the market is always healthy for the market. It adds liquidity to the market. It adds the ability for folks to find liquidity, whether they want to buy and sell. So the more interest that the retail folks have in the market is always going to be positive.
All right. Well, somebody's interested. Mike Santoli, I know we're going to hear a lot from you when this opens, and Pete, you as well. We're going to get back to you with that first trade. But for now, let's turn to Apple. This one's been trading for a while. My next guest downgraded the stock in early July from a buy to a hold. She says the level of AI CapEx required to catch up to the competition makes her cautious into the print. Let's bring in Needham's Laura Martin. Laura, welcome. Does Apple really have to spend on AI, or can they just ride on the investment of others, since they're kind of the gateway to the premium consumer?
I don't think they can. They have this wonderful installed base that's very loyal right now. But the problem is their only competitor in real life is Android. And that happens to be owned by Alphabet Google. And Google is telling us that they are putting generative AI tools and features into every one of their products, including Android. So if Android rushes ahead of Apple, you will get people replacing their Apple iPhones 2 years from now, 3 years from now, 4 years from now with an Android. And then that starts to destroy the entire Apple ecosystem equation, because all of the other hardware products are upsells from the iPhone, and services is completely dependent upon the iPhone. So there's real existential risk here if Apple doesn't have a response to the Google Android threat.
Well, that's the part of this that I'm skeptical of, and that I think investors really need to think about. I don't have an answer one way or the other, but it doesn't seem to me that there are yet operating system level features that are AI driven, that are differentiating anybody, Android from the iPhone. So far, we've got apps mostly right on top of it, nothing that consumers are really attaching to. So should investors wait until there really is that clear danger that Google Android is gaining?
Guys, yeah, I have no idea when this shit is going to pop. I don't know when it's going to be available for trading. Bro, I think with IPOs like this, it just takes a long time because there's so much demand. So they're trying to get their pricing right. They're trying to get all their ducks in a row. Yeah. Yeah, okay, so it looks like somebody said that 1 p.m. Eastern would be the time they start listing. It's 1:10. I don't see anything yet. All right, let's get back to some coverage real quick. Hopefully we get the listing soon. By the way, post bell, we got Apple, Amazon, Coinbase, Reddit, I think. Those are the big ones. I personally have a big Amazon bag, so I really want them to pop. I think they have a really good shot at doing that after what we saw with Microsoft yesterday. Microsoft reported like 34% growth in Azure cloud computing rather, based off of the strong AI demand. I think that if Amazon gets to anywhere near that with AWS and they, express the fact that they have tons of demand for AI cloud computing, then they will also pump. That's the big question. I think that's what everybody's waiting for. I mean, these earnings calls seem like it just seems like everybody's waiting to listen in on just like how much AI compute they see demand for. So if you are a cloud-based company that sees tons of demand, your stock is going to pop. Although with Google, what happened this week is they reported really strong cloud earnings. Cloud demand, and the street just didn't like it. They were still flat, but I think Google is just beat up in general. Like, I love that it's beat up because I love Google, and I think they're going to be a major AI player when it comes to everything in that space. Just people are underestimating them, all that stuff. Like, I would rather accumulate Google here under 200. I also bought some Leap. Well, actually, not some Leap. Some 6 months out $200 call options. I just think it's criminally undervalued here. So yeah, we'll see. Anyway, I will likely also be streaming some of those earnings calls. Probably the Amazon one. I mean, honestly, the Amazon and the Apple calls are so boring whenever you listen to them. But hey, probably Amazon over Apple. Coinbase is at 5:30 p.m. Eastern as well. I think Coinbase is going to do well. We're kind of in this upswing, pseudo bull market in crypto because of all these stable coins or all the kind of action and excitement around stable coins and what they can do for banking. So I don't think Coinbase is slowing down, but who knows? I don't know that they massively pump. I mean, look at Robinhood yesterday. Stellar numbers. Did they pump like crazy? I mean, not really. They actually dipped a bit this morning. And I don't know where they're at now. But yeah, Robinhood doing great things. I mean, like probably a lot of people in the chat, I just have a long-term thesis, long-term time horizon for Robinhood. I think they're going to be kind of, how I like to frame what they're doing is the Costco of finance, right? They are going to want to cater to everybody that wants to move money around or that wants to get a loan or that wants to invest. So that's what I think there. Anyway, back to Figma. We still got nothing. I can unmute YouTube TV, see what's going on CNBC. Let me know your thoughts on earnings post-bell today, too, while we wait. Amazon, Apple, Coinbase, Reddit, any big shareholders there? Let me know what you think.
There's value in that. And I would say on our target price, we actually can back into it on an earnings multiple a few years out. So in 2028, it's trading about 25 times our earnings.
Check, Christina.
John, the scramble to build AI infrastructure has really morphed into a credit race in a, quote, very large market, as Tyler just said moments ago. Well, CoreWeave leads the charge using GPU-backed loans, aka using its chips as collateral, as well as high-yield bonds to finance data center growth. It now carries over $17 billion in funding commitments, and some of it is at double-digit interest rates. Long-term contracts with OpenAI and Microsoft, for example, provide some cover, but the company is racing to build revenue before debt payments hit. XAI, another example, raised $10 billion in July, half in debt, and is seeking $12 billion more to build out their AI infrastructure. With limited operating history, they're using unconventional collateral, including its Grok model IP. Meta is playing a different game entirely. It's negotiating a $29 billion private credit deal with Apollo, KKR, a few others, according to the FT. Off-balance sheet financing lets Meta invest heavily in AI while preserving credit metrics. That is key, but does make things far less transparent. And then you have OpenAI's Stargate project, which secured over $11 billion for Texas data center build-out, a Texas data center build-out. What stands out is that it's turning to private lenders instead of traditional markets, like banks, for example. AI isn't just
driving innovation. It's rewriting the playbook for how tech companies borrow, collateralize, and scale. The winners might not be the ones with the best models, but the best financing terms. And so when debt comes due, John, the smartest chatbots won't matter if you can't pay the bills.
So true.
John?
So true. Christina, thank you. I want to mention the new indication price for Figma, a bit lower. It's now between $95 and $98 a share. Tyler, I want to get back to you on this debt idea. I mean, we do see in tech overbuilding, whether we're talking about chip fabs, there's a cycle there. We saw it with Amazon and with warehouses during the pandemic. Given the level of debt that's being taken on, the excitement around AI, how exposed is CoreWeave and its ilk to the debt side if there's an overbuild?
Yeah. So I think the important thing to remember is sort of the order of operations in which CoreWeave does business, right? So it's not that they're going out and raising debt and speculating on customers that they're going to sign, right? They get an order from a customer like an OpenAI, a contractual commitment, again, not from startups, from major AI companies. They go out, make a down payment on the GPUs, and then finance the rest, right? So you do have contractual obligations, that non-cancelable backlog that we do think is very credible. Now, obviously, if we get to a scenario where all of a sudden, there's a disruption in, say, the chipset side or in terms of model architecture, there are some risks. But I think, for the next year, certainly we're continuing to hear capacity constraints from the big players like Microsoft, and ultimately this debt is backed by contracts from some of the largest companies around the world that are very well capitalized. And
right, that's a piece that that you mentioned that I wonder about. I mean, OpenAI, wonderful product, business model still becoming clearer because it's not profitable, but they're growing really fast. And in the event that there's a slowdown, right, and there's because the build out has to be somewhat ahead of demand, at least the efforts, the commitments ahead of demand. If there's a slowdown, how do you expect some of these companies like CoreWeave with these commitments to react stock-wise?
Yeah, well, I think CoreWeave, as we've seen with the volatility, you talked about it, down 40% in a month, up 2 to 3x from the IPO. I would expect this to be volatile for sure if it's a slowdown. I mean, it is a leveraged play on this theme, but again, we're at the early innings of this build out, right? I mean, we're seeing demand today from the OpenAIs and some of these other high growth startups like the Cursors of the world, but you haven't even seen the traditional enterprise really start to spend on this category yet. So I think we have a long way to go before we're at this overbuild out. And by the way, I actually think, and I know you guys have been talking about this, one of the biggest constraints is actually on the power side. So I'm less worried about, are we going to have too many chips and is there going to be too much data centers? I still think this power constraint is going to be the biggest bottleneck, and the Core Scientific deal gets a lot more power over the next few years.
We still have nothing. I'm refreshing the chart. We still have nothing. It seems like pricing is being figured out right now. So I mean, there's a lot of price discovery going on right now, to be honest with you guys. On the day of listing, like before a stock trades, like the market engages in a process of price discovery. So it kind of, what's going on is the markets analyze the buy orders, the sell orders, to determine the opening price. So that is what's going on. Likely a ton of price discovery. Yeah, they are supposed to list any time now, but you never know. How many shares, if you do have shares, how many shares do you all have in here? I'm curious. I'm so heavy in Figma. I got 1 share from Robinhood, so I am heavily invested in this with all of you guys. $109 from Robinhood? Dude, that's pretty good. Only got 1. Krish. Yep. I think you, and most of the retail investors on Robinhood are all like 1 share. Yeah, it's pretty crazy. I have no idea who's buying at the price that it will open at, like 100 plus. I don't know. I was telling everybody I don't tend to buy on the day of IPO. If I don't get allocated shares, I kind of wait it out, wait till it settles, and then if I want to be in the name, then I just slowly build a position, just like everybody else. Just like anything else I do in the market. I'm more of an investor, not a trader. So that is me. Everybody is different. Super has 1 share. Yep. Super has 1 share. You have some limit orders in, so that's good. Is it worth it if it goes over 100, Jason? I don't know. Again, that depends on your kind of outlook here. Are you trying to flip it? Okay, so now the new price is 90 to 92 after all this price discovery. So it is coming down a bit from the highs of a 110. And according to the poll here that I threw in the chat, 71% are buying Figma today. That's nuts. I guess we're in full IPO window mode, full kind of just like euphoria, excited about IPOs mode. Leo Lima, I just listened to, sorry, I have the CNBC stream on in the background. That's where I heard the price. I will switch to that for a bit, actually.
trade, but it's no way back to the levels it was a few years ago. And so that could present some upside to the markets, but it also does present some downside risk. But we think that investors need to continue to focus on where the core growth is. And when you think about what Microsoft said overnight and also what Meta, the fact is these companies are delivering on earnings growth. The CapEx numbers are moving up. We, in fact, I think you said earlier, had to move up our CapEx numbers for AI to $500 billion for next year. I mean, that's suggesting a 33% year-over-year growth on top of a 67% that we've seen this year. So we continue to encourage investors in our own portfolio stay up in quality on those secular growth stories.
But is this 2021 on repeat is part of what I wonder, especially looking at the IPO market. Look at how Figma is indicating. I remember Affirm, I remember C3 AI coming to market, and sort of the sense that particularly with the AI, with the IPO market, perhaps things were getting a bit warm. Is this an IPO window that's opening, that's been closed for a while in a healthy way? So investors are.
Can you all hear the audio on CNBC or no? I think I'm having some weird issues with my audio.
To be cautious, as we know that IPO levels has been suppressed. I mean, you have a lot of private equity that has been waiting for exit opportunities. The M&A market also has been quite depressed. And so with the clarity that we're getting from the economic policy standpoint, there's more clarity now on trade. There's potential more clarity now on monetary policy with the Fed probably set to cut later this year or into next year. That is what is allowing these things to come to market and investors to put money to work in some of these things. So I don't think that there is any sort of red flags out there at the moment from in terms of a liquidity standpoint or over optimism in non-profitable tech or any sort of unprofitable companies. It's more a reflection of getting clarity on the policy front and unlocking some of those opportunities and the pent-up demand that's been there for the last few years.
We talked a lot of tech, but you also like utilities and comm services. Tell investors why.
Yeah, utilities, as I alluded to, I mean, there is a need for additional power demand, not only from an AI standpoint, but from overall the global electrification standpoint. So we really think that this is going to be a $3 trillion revenue opportunity by the end of the decade. There just isn't enough power right now to meet the demand. And so we think there are opportunities in utility. Comm services is very similar. It's an AI story. You saw both Alphabet and Meta report, and there's monetization happening in AI spending, and it's happening, but we're starting to see the monetization comes through as well. And we think that there's more to go in those stories.
All right. Sounds good. Nadia Lovell from UBS. Thank you. Coming up, 3 of the Mag 7 left to report, including Apple and Amazon in overtime today. Ahead of those reports, we're going to drill down on Amazon's $100 billion investments in AI, whether it'll be enough to beat the street's sky-high forecast. When the exchange comes right back.
All right, y'all. Still waiting on the listing. I'm refreshing the Robinhood chart. Nothing yet. Let's see what's going on here. Set limit orders for 105. Gonna sell at 141 if it hits 141. I mean, good luck. Yeah, I mean, that's if you can get it at that price and then flip it, great. Depending on how much capital you're putting in and what your risk tolerance is, that is a risky move. But hey, to each their own with risk tolerance, I guess. Yeah, so CNBC is in a commercial break. Price discovery seems like it's still going on in the market. I mean, this is kind of to be expected with I think it's like a 40x. I think the IPO is 40x oversubscribed. So yeah, that's probably expected. IPOs like this just have a lot of demand. It just means that the demand exceeds the shares that are offered by the company. So they really want to make sure that they price it right and that they open at the right price. Underpricing is a tactic, but If you are a company and you underprice, that means you could leave a lot on the table. So I am going to assume that everybody's just waiting on a good price via this market discovery. So let's see what happens here. And one note on oversubscribed IPOs that I think you all should know, right? Because there's limited supply, this means higher prices, obviously. And it also means that there is probably going to be a lot of volatility. So you could gain a lot initially, you could lose a lot if you buy at a higher price. This is with any stock, obviously, but on IPO day of an oversubscribed IPO, things can get nutty. And we'll show the chart whenever it starts listing. But yeah, this is a very attractive IPO. Figma is very attractive. Like, they are oversubscribed for a reason, right? They probably have they have strong company fundamentals. I think I went over them here a little bit earlier. They have a lot of positive market sentiment around them. So okay, so coverage here. Okay, so the new price here is 89.50 to 90.50. So that is the update. 80. Yeah, it was on the screen a little while ago. Okay, so the price is coming down a bit via discovery here. Like I said, positive market sentiment, probably a very attractive price where they initially priced it at, and just a ton of hype, right? Like, you go on Twitter, you turn on any YouTube channel, you look at the news coverage. There's just a lot of hype around this name, and I think around IPOs in general this year. I think what's happening is this new administration. So we used to have under the Biden administration, there used to be a lot of bad sentiment around M&A. So what that means is, we saw this actually in Figma. So we had, I think her name was Lena Khan. Lena Khan was very much not into monopolies, and I get that. I totally get that. Monopolies are not good, but when you look at a few of these deals that were about to happen and they got kiboshed by Lena Khan, then there was an issue. So Adobe wanted to buy Figma for 20 billion, I think a year ago or so, or a year and a half ago or so. That deal got squashed at a regulatory level. So Lena Khan said, nope, Adobe, you cannot buy Figma. You are too much of a monopoly, right? Without actually looking at the nuance and the detail of the deal. Because really, if you look at Adobe is, yes, they are a company that is focused on providing design tools, right? But their bread and butter is not product design, right? It is more graphic design. It is more illustrative design. So yeah, I don't really think that buying Figma would have created a huge monopoly in the market for them. Figma is very focused on product design. So if you're designing an app, if you are if you're designing an app, if you're designing a website, if you're doing anything that has to do with product design, then you likely use Figma. So they are two separate businesses, or sorry, they have two separate target markets. I guess you could argue that Adobe would capture that other segment and that would make them a monopoly, but that's a weak argument in my opinion. But anyway, yeah. Still waiting on this price. I will unmute the coverage as soon as it comes back. Maybe we have something. And also doing this stream while I hop in and out of meetings, so that's why you'll and do actual work. So that's why you'll see some pauses during the stream. Yeah, chart still shows nothing. Let's see. All right, I'll unmute the coverage for now.
Welcome back to the exchange. A September rate cut seemed to be pretty much in the bag yesterday, but a lot's changed in 24 hours. Our Steve Leisman joins me. Steve, why have market expectations
ahead by 1 month into October and now January? So just one cut really dialed in for this year. And that was supported by inflation data this morning going the wrong way, likely driven by tariffs. The year-over-year core PCE inflation gauge rising for a second straight month, now at 2.8%. That's a problem for a Fed. It wants it down to 2%, going the wrong way. All told, says JP Morgan, progress towards bringing both wage and price growth down to levels consistent with the Fed's price stability mandate has stalled recently. Powell yesterday, the Fed chair, explaining policy very simply, quote, inflation is running above target, employment is right at target. That means policy should be a little bit restrictive, even while the president wants it to be very, very loose. It could stay that way, that is restrictive, until the Fed figures out the tariff impact on inflation. Compounding the problem, real income and spending numbers this morning coming in flat for June. So the economy experiencing exactly what was predicted from tariffs, stagnant growth and higher inflation. We're going to learn more about this tomorrow. We get to talk exclusively with Atlanta Fed President Raphael Bostic at 10:30 a.m. John?
Looking forward to that, of course, and stick with me, Steve. My next guest says it's going to take meaningful weakening in the jobs market to get a September cut. Joining me now as well is Mark Zandi, chief economist at Moody's Analytics. Mark, there's a narrative out there that the administration is fond of, saying tariffs are not inflationary, just a one-time price bump up. But we've got this new data. What's the data showing about tariffs thus far? How long is it going to take before we get a more definitive answer?
Inflation prices are rising. It's been slow coming for lots of different reasons. The front loading of imports, the fact that the tariffs are up and down all around, and business people just don't know where they're going to land and are nervous about raising prices, losing market share before they have a sense of where the tariffs are going to land. You know, some big companies are probably pretty nervous about the political environment and raising prices in that kind of environment. So a lot of things going on, but, you know, it's happening. We know American companies and consumers are paying the bill because you can see it in the tariff revenue. It's quite substantive. So we're paying for it. So far, most of it's been by businesses and lower profit margins, but I don't think that's going to continue for very long. And we're going to see more of a translation through to prices that we pay as consumers. So inflation is up. You know, Steve said 2.8% on the core PCE deflator. That's well above the Fed's 2% target. And the direction of travel here is very clear. Prices are going higher, inflation is going higher. Now, whether it turns out to be one-off or more persistent, that's to be determined. But you know, when you're in the middle of inflation rising, it's pretty difficult to say, okay, it's time to cut interest rates. And I think that's the kind of the conundrum the Fed's in. I don't think they can cut rates with inflation moving higher unless the job market really weakens.
This is a really difficult one to figure out, Steve Leisman. We know that the president made that trip to the Fed, the now infamous hard hat picture. He said he thought that Fed Chair Powell would do the right thing in Trump's eyes, which is lower rates. But we've gotten no indication that the Fed is headed that way thus far for some of the reasons that we're talking about. What kind of weakness do you think it would take to convince the Fed ahead of the tariff clarity that rates need to be lower? And what does history tell us the impact on equities might be?
So I think that you would have to have substantial rise in the unemployment rate. Not much if you went up to 4.3, 4.4, 4.5, which would still be low, but it would really show a direction to the Fed. If payrolls were down substantially in the 50,000 or zero range, the Fed would probably act in those situations. But John, I want to go back to your question to Mark, which I think is really interesting. You said, well, tariffs could be a one-time price hike. We're still in the middle of the one-time, right? So the idea that somehow we went through the one-time price hike in May or in June, the president is still levying tariffs. We just learned about new tariffs yesterday. Some of the tariffs on India, South Korea, they haven't worked their way through the system. Goldman is counting a 7.4 percentage point increase so far in the average tariff rate. They think it's going to 14%. So this is the problem. The market operates on a I got to know this second timetable. And the economy doesn't work that way. It's going to take time. You heard Mark Zandi say that companies are taking it on the chin right now in profit margins. I'm looking at an amazing list of comments from companies so far. Let's see. Ford said, what was it? GM said a $1.1 billion tariff hit. Ford said $2 billion. How long can they operate this way before they start to pass it along? This one-time price hike, I don't know, maybe could be 6 months.
Mark Zandi, to Steve Leisman's point, well, when Whirlpool reported earnings just a few days ago, they talked about the impact of some of their Asian rivals having basically shipped ahead of the tariffs into the U.S. market. That was hurt.
Yep, refreshing the chart. I see nothing yet. Nothing yet. We are still in price discovery mode right now. So let's see what Figma opens up. Yeah, Mickey, still not trading. I know. But I mean, that's what price discovery is in an oversubscribed IPO. So that is just the nature of things. The target price is really too high. It is coming down, obviously, in price discovery, as you see now. But yeah, 105, 110, those prices that it reached at initially a little while ago, that's probably a little too expensive, in my opinion, for Figma. But yeah, that's definitely too high. We will see what happens. According to the poll here, though, 71% of the chat is buying Figma today. So, hey, listen, if you're buying today, good luck. My friend texted me today. He's like, I could have got allocation from Morgan Stanley. I didn't get any. I mean, just let it play out, bro. Let it play out. Yeah, so the chart is here. As you can see, it is not open for trading yet. Whenever it does, we should see the chart refresh. But yeah, nothing. Nothing yet. Nothing yet. Nothing yet. Okay, guys, I'm going to be a little bit MIA. I will still kind of be in and out, but I have to do a work thing. So let me Let me get the stream back up on CNBC at least so you all can see coverage. I will stream the chart when it starts trading.
With the currency things happening, or is the luxury consumer still raring to go?
Hi, John. Thanks for having me. Good to be with you again. The affluent consumer is still raring to go. We have seen no slowdown whatsoever. Our assets are performing extremely well. We couldn't be happier with our second quarter results and our ability to not only beat but raise our full year guide and our EBITDA by $60 million to a new midpoint of $1.705 billion. And it's really being driven by the money that we've invested in our assets, $1.7 billion over the last 6 years in ROI, CapEx, and the capital allocation decisions we made over the last 8 years, where we are really geared toward the affluent customer. The affluent customer is doing quite well, and when they show up at our properties, we're getting no rate resistance to some of the assets that you mentioned early on, and the out-of-room spend keeps going up. So we had a very strong increase in food and beverage revenues in the quarter of 4% as well, driven by outlet growth, really strong growth in our outlets.
So does that tend historically to reflect the rise in the stock market? I mean, I imagine a lot of your luxury consumers do have quite a bit of their wealth in stock or conservative investments, fixed income as well, I imagine. So they're maybe feeling a little flush, no?
I think they're very well positioned when they look at their balance sheet today. But interestingly, John, you know, luxury RevPAR has consistently outperformed the other hotel segments over long periods of time. Luxury RevPAR in the quarter was up 5.9% on a compound annual growth basis. And then if you go all the way down to the bottom of the chain scale, economy RevPAR lost ground to the tune of about 5% in the quarter. So luxury has been outperforming for quite a while. Yes, the consumer is, looking at the balance sheet based on how their stock portfolio is going. But there's a lot of wealth that's been created in housing as well.
Okay, we're awaiting the potential opening of Figma. Big day for technology, especially after the results from Meta and Microsoft. So, Jim, I got to ask you about technology in your business. Given how well things are going, given that you're a luxury business, are you leaning more into that human touch luxury experience, or are you more leaning into AI as well as part of this experience? How do you figure out where to invest in technology versus where to distinguish yourself with people?
Well, we started the quest in embracing AI back in 2017 when we did a partnership with IBM Watson to help us better predict what markets were going to outperform over time. So it was predictive analytics, and it was I think we were a pioneer in the field, certainly in the hospitality space. And the Watson model that we had, that we affectionately call Watson here at Host, guided some of our investment decisions, and it's the portfolio results have proved out very well. And that took structured data as well as unstructured data, 1 million data points of structured data at the time. Today, given our size and scale, we are able to work with our operators to really roll out pilot initiatives on the AI front. One of the things that we're working on today is interactive voice recognition, whereby we can enhance the customer's experience whenever they call the front desk with a simple question. They get an answer from an AI chat, and it's working out really well. But we will never not touch the customer. Certainly, hospitality is a business where you should have a touch and feel with your customers, in particular in the luxury space. But we are in a position, given our size and scale, that we can roll it out. We'll have interactive voice recognition at over half of our hotels by the end of this year.
All right. I appreciate the insight. James Rosolio from Host Hotels. Well, pharma stocks are on the move as well. Our Angelica Peebles has that story. Angelica.
Hey, John. Well, President Trump is sending letters to 17 pharmaceutical manufacturers, calling on those manufacturers to take voluntary actions within the next 60 days to lower the price of prescription drugs in the U.S. to similar prices around the world. So he's calling for 4 things. He wants these companies to extend most favored nation pricing to Medicaid. He also wants them to guarantee MFN pricing for newly launched drugs. He also wants them to return increased revenues abroad to American patients and taxpayers, and to provide for direct purchasing at MFN pricing. So these, obviously those are 4 different points. There's some details there. We'll have to see exactly if any of these companies agree to take those actions, and some of them could have varying degrees of impact, right? So guarantee MFN pricing for newly launched drugs, that would be a little bit tricky to actually implement because typically companies launch their drugs first in the US. So how do you compare a price here versus overseas when there is no overseas price? Now, it will be interesting, of course, to see how these companies respond. And as you go through some of the companies that he's making this plea to, we have Lilly, Pfizer, AbbVie. And in these letters, he's actually making a personal appeal to some of these companies. For example, Lilly CEO Dave Ricks, he crossed out Mr. Ricks and wrote David. So you can see that the pressure is increasing, guys.
Oh, for sure. All right, Angelica Peebles, thank you. Meantime, we're watching the Figma IPO. New indicated price coming down a bit more, now 86 to 87. Of course, it priced at 33. We're going to take a quick break and be right back after this.
This river wasn't dammed in a day, and GMC trucks weren't built overnight. Like every American achievement, they are a result of dedication. Over 100 years dedicated to the art of engineering and the ambition to always move this country forward. Act now to get $7,500 EV federal tax credit. Celebrate Independence Day. Use it to get this low mileage lease on the Sierra EV Elevation for around $599 per month.
Turn on Share My Trip in the Uber app, and we'll keep your loved ones updated from pickup to drop off.
So the other night, my family was deciding what to watch on Apple TV Plus because it comes with a Sapphire Reserve card. So I said, "What's your favorite show?" And they all said, "Slow Horses." So it's honestly fine they didn't say my show. I'm not sensitive at all. So I love Gary Oldman.
Me gusta la comida buena, este sabor me desespera, con ganas me lo como entera. Me gusta la comida buena.
Nationwide is more than you think.
Yeah, their client-ready market updates make it easier for me to guide clients, giving me more time to keep plans on track. Total time saver.
Okay, say that 3 times fast. You can now because you have more time.
Genius.
Make it cold.
With AC Pro, anyone can recharge their car's AC. Like a pro. Be a pro with AC Pro.
On nights like these, in my willpower's me. I got a car, so just let it be. I drive these streets, so come looking for me. If you're letting go.
Current owners and lessees of an eligible competitive luxury brand vehicle get this low mileage lease on this 2025 Cadillac Optic all-wheel drive Luxury One vehicle shown for around $399 per month.
We do your human resources right so you can do right by your people. Just works for your people.
Welcome back to the exchange. We've got a new indicated price for the Figma IPO, now $85 to $86 a share. Now, an hour ago, it was more like $100 a share. Well, in the meantime, the S&P and NASDAQ are also off their highs. The S&P now a bit negative. The Dow has been the S&P and NASDAQ at session lows. Meantime, Amazon also reports after the bell today, shares higher into the print by more than 1%. And like Google and Microsoft, AI capital expenditures are one of the key numbers to watch for in this Mag 7 name. Our Mackenzie Sigalos joins me now with more. Matt.
Hey, John. So Amazon is on track to pour more than $100 billion into CapEx this year, its most investment-heavy year ever. It's part of a hyperscaler arms race. Microsoft just pushed its total above that level after the close on Wednesday, and Alphabet recently boosted its spend to $85 billion as all three fight for share in what's become a tightly contested race for AI cloud dominance. Citi estimates that about 3/4 of Amazon's capital is going into AWS infrastructure, including its in-house chips and massive data center build-out. And that is the big focus heading into the print. You've got AWS, which remains Amazon's profit juggernaut, delivering over 60% of operating income last quarter with margins that are triple the company average. But even as that cloud leader, it is growing much slower than its rivals. Q2 revenue is expected to rise about 17% compared with Google Cloud's 32% growth. Microsoft just disclosed $75 billion in Azure revenue for fiscal 2025, up 34% year over year, helping push its market value past $4 trillion. And all of that puts pressure on Amazon to show that AWS can reaccelerate and capture the next wave of cloud spending as generative AI workloads ramp up, with analysts also looking for signs that its partnership with Anthropic is starting to pay off. John?
Yeah, that's an important partnership. And if I can tie this back in to Figma, which we're looking for to open up, so much software, whether it be enterprise or consumer, is operating in the cloud. Figma has distinguished itself recently by building in AI capabilities to help developers design websites, design illustrations, etc. Part of what Amazon's also trying to show here is that it can be efficient in the way it designs chips so that...
All right, guys, I'm popping into a meeting. Looks like the price is 85 to 86 now, so it's coming down a lot from that initial 110 pop in the price discovery. I will leave the CNBC stream on. Hopefully you guys get coverage. Oh, actually, here we go. Here we go. Figma is trading. Figma is trading. Let's look at the chart. Figma is trading at 93.5 apparently.
From around 100 plus per share down to around 85 to 86 the last time we mentioned it before it opened. But you never know. I mean, the market is a live thing, Mackenzie. And even as we're talking about these hyperscalers, these big companies opening up, and there it's halted. Not sure what that's about, but never a dull moment here on the markets with CNBC. We've been waiting for hours for this thing to open, and it opened and closed.
So Figma opened and then immediately halted. What the hell is going on?
Yeah.
Take it back.
Well, we can't. Mike Santoli, it opened and then halted?
Yeah.
Let's see, I'm not hearing Mike Santoli, but we're going to be sure to hear a lot more from him on the floor of the New York Stock Exchange. Very important moment for the markets and for IPOs in general, as we're looking to see whether the excitement around technology can bring more fuel to an IPO market that had been uncertain. I just want to remind investors, Adobe had tried to buy Figma a couple of years back for around $20 billion.
Okay, so it opened at 93.5 and then it halted a little bit. Trying to get coverage on why it halted. But guys, I have to run into a meeting right now. I'm going to keep it on CNBC for coverage. Let's see what happens here. Hopefully you guys got some shares at a good price.
Yeah, we're going to pick it right up there, John. Thank you very much. As you can just see, we should go right back to that major hype at the New York Stock Exchange. By the way, welcome to Power Lunch, everybody. I am Brian Sullivan. Technology once again in focus today. You got big earnings beats from the Magnificent Seven stocks. AI spending continues to go up. We'll get to all that in a minute. But as you just saw, happening right now is that first trade of design software company Figma. Now, that company is set to open or just opened up, I'm not exactly sure, at $90 a share. Now, let's go back to that shot if we can, guys. It opened up, kill the music, go back to that shot. It opened up at $33 a share. Look at that. It is indicated at $93.50. You just saw the founder, Dylan Fields. I know he's young looking. He's 33 years old, Field, singular Field. He is 33 years old. Let's go down now to Michael Santoli at the New York Stock Exchange. Michael, not only a big deal IPO for the NYSE, all the employees there, but Mr. Field, at 33 years old, owns 61.3 million shares. Yep. He is now one of the richest tech founders in the history of America. And off the top of my head, I'm just going to say it until it's confirmed otherwise, one of the 5 youngest self-made billionaires of all time.
Yeah, I couldn't think of that many more of them, Brian. Yeah, there's no doubt about it. So obviously a pretty big event, the way they're basically getting to a $50 billion-ish market cap at the opening price. Now, it did price to the new issues market at $33 last night, opened at 85. The opening trade that was mediated here, about 5 million shares crossed at that $85 opening level. And then once it was free to trade, it did trade up to the low 90s, 93.50. May have hit a sort of technical trading halt just because of the percent gain off that price. Nonetheless, the story remains the same, which is a very, very coveted IPO. 40-to-1 oversubscribed is what we heard. It did show some indications along the way before it opened that it could go as high as 105 or 110. When those indications flashed, clearly it brought out some supply of those, people who were lucky enough to get it at 33, and they're going to cash in some. So about, 1 out of every 8 shares offered did trade in the opening print. We'll see how it carries on from here.